What's up, everybody? Today I'm going to be going over my bullish thesis for Curiosity Stream. Okay, so this is a stock I started buying recently. And if we take a look at the stock chart here, we could see that company went public last year via SPAC at around $10 a share. Then early this year, it shot up to $23 a share, and now it's back down to 12. So I started buying right around this $10, $11 range, okay? And I'm going to give you all the reasons why I'm bullish on this company. So to start off, Curiosity Stream is a small cap company. The market cap is only about $670 million. And what they do is they are the leader in documentary streaming. They also recently bought out a company called One Day University, which is pretty much a collection of college lectures. So this company specializes in documentaries. Like, it's pretty much for people who just want to learn things. It's science, it's lifestyle, it's history, it's all these different things, and just a bunch of documentaries. Now, the important thing here to realize is that what I really like about this stock too is that the founders of this company were the people who grew the Discovery Channel and Animal Planet. So in 2014, the founder left Discovery Channel and then he founded Curiosity Stream. And I've known about this company for quite a while now, only because I see influencers and stuff on YouTube advertising for this platform. So that's how I know. They're also pretty smart with the way they're doing advertising, because a lot of it has been through, YouTube sponsors and stuff like that. So next thing I want to show you is, so here's a couple of the different things they do: science, history, technology, nature, society, and lifestyle. So lots of different topics. Now, the underlying trend here that's going to make or break this stock is the trend towards streaming. So we all know that over the past year, streaming has become incredibly popular, and lots of these platforms like Netflix, Disney Plus, Amazon Prime, Apple, they all are growing very fast. So it's not that that's why I think Curiosity Stream is a really good one. It's a really good candidate for a buyout, because once you have the big players in this industry dominating the market, this is the perfect company to add to their collection of content. So the other thing I really like about this company is that their margins are better than most companies. So this company has gross margins of 58%, which are super high. And the reason that is, they say, is because normally for the other streaming services, they are spending more money on producing content. But for Curiosity Stream, since it's a lot of documentaries and they're not spending as much money on content, they're going to have better profit margins. So that's another thing I really like about this company. Now, if we go ahead and look at some of the numbers, we can see that subscribers grew 28% year over year from Q1 2020 to Q1 2021. 20% growth for subscribers is a great number. Revenue was up 33%. That's huge too. Those are great numbers. Now, the other cool thing about this is 2021, they're expected to grow revenues to $71 million, which will be up 80% year over year. And if we look at what analysts have been doing, we can see even throughout 2022, they're still not expected to turn a profit, which that is my one and only problem with this company. And it's a huge problem, because normally I don't like to buy into companies that aren't profitable, but that's why I'm kind of allocating just a small percentage of my money into the stock. But I think although it's a little bit higher risk, I do think has greater potential for a bigger reward. So I could in the next couple of years, I could see the stock being like $30+ dollars. And if you look at the revenue estimates, we can see that for 2021, analysts have them doing 79% revenue growth, and then for 2022, 73% revenue growth. So I would not be surprised if they actually turn a profit in 2022. And it would be even better, honestly, if one of these big companies like Disney or something bought them out. I think that would be really cool. But as of now, we'll see what happens. I mean, I just feel like if you look at the risk versus reward here, it's really favorable because, yeah, I mean, if you look at the stock chart, you can see it's fell so much that it's like it has there's a good chance the stock will 2x or 3x. And I mean, you're getting it almost at IPO price of what it was last year. So it's because it's come down so much. So still at $12 a share, this is pretty cheap. So overall, I think great company, great. I mean, I think everybody in this streaming space is going to want their content because if they have a bunch of college lectures and they have all these, top-notch documentaries, that's good stuff to have, in your content. And what Curiosity Stream was talking about the other day was they were saying how their content is more universal and it's easier to, it's easier to have an audience because people all around the world, all demographics are going to be interested in some of these in factual content. So that's the other important thing here. Now, last thing before we end this, if we look at the short interest right here, we can see 17%. Okay, that is pretty high. It's not as high as like AMC or something, which is like 30%, but 17% short interest is high enough to the point where we could get a short squeeze in the stock, and the stock can shoot up to, $20 or $30, and that would be cool too if that happened, because that would be quick money. But overall, good company. Only problem is profitability, which I think maybe in a year or two they'll be profitable. But overall, though, the risk versus reward is just it's so good here that I feel like this is a smart investment. So let me know what you guys think.